Well, the dollar has been dipping so far in 2017, which can drive investors to the precious metals market to buy gold. But what about an in-demand mineral? Financier and mining industry player Robert Friedland made the case for copper in Vancouver last week. He's incredibly bullish on the mineral, estimating it'll increase ninefold in the next 20 years, outshining gold. Copper is currently trading around $2.89 a pound, a two-year high. Meanwhile, gold is bouncing back from a dip in December, still chasing those 2016 values. To talk about how copper could come out on top, I'm joined by Peter Schiff, CEO of Euro-Pacific Capital. Peter, Friedland says he's confident copper will outperform gold as an investment in the coming years, but obviously we have to look at where his opinion comes from. His company is currently developing one of the world's largest copper projects in the Congo. So I want to ask you, what's your outlook on copper? Do you think that he's right, that it could outperform gold?
Well, look, anything could happen. I'm bullish on copper. I think he's right to be optimistic. You know, there's going to be more demand for copper, particularly if the dollar keeps falling. It hit a new low for the year today. I think the dollar is going to keep falling. That's going to keep stoking worldwide demand for commodities, particularly out of China. You know, I am expecting a very sharp move up in the value of the Chinese currency. You're going to see more copper imports in China. So all that is bullish. And of course, you know, you have a lot of people now looking at electric cars. I mean, copper is a very important ingredient or a component of the batteries and the engines. So to the extent that more people want electrical powered vehicles, that's another source of demand for copper that wasn't there before. So I like copper. I'm invested. I have exposure to copper. I own companies that mine copper, that own copper. But gold is a monetary metal. And so I think the price of gold is going to be basically marching to a slightly different drumbeat than the price of other industrial metals like copper. But I think they're all going to go up. But I think it's a stretch to say that copper is going to outperform gold, because I do believe that we're going to have a monetary crisis, a dollar crisis, and I think people are going to rediscover the monetary properties of gold, and gold will be used as money again. And when that happens, I think it will have a premium. So you know, I wouldn't be selling all my gold to buy copper.
And I mean, you're saying you're bullish on copper, but ninefold in 20 years, that's pretty steep.
Well, he's talking about the dollar price, so hey, anything is possible there. I mean, I'm very bearish on the dollar, but if copper is up ninefold, it probably means a lot of other things are up a lot against the dollar too. The question is the price of copper going to go up in terms of gold? And that's a totally different question. And there I'm not so sure. I mean, I'm confident that copper prices are going up in dollars. I even think they're going up in euros and yen and other fiat currencies that might not lose as much value as the dollar. But it's hard to say whether the real price of copper, meaning copper in terms of gold, is going to go up or down, because I think demand for both is going to go up in the years ahead.
But both don't really have the amount to kind of meet the demand that's facing both the copper and gold industries. What are some of the challenges that gold faces?
Well, you know, gold still faces a lot of skepticism. I mean, look at, you know, gold is not really up that much this year. I mean, it's up, but given how much the dollar has fallen, you would have expected, and I expected, gold to be up more. In fact, in terms of currencies that are not the dollar, the price of gold is barely moving. So I think you still have a lot of investors who believe that rising interest rates are bearish for gold, or still believe that the central banks were successful in solving problems, that now that they can take a victory lap and normalize interest rates or shrink their balance sheet. I think that this is all fantasy, wishful thinking at best, or outright denial, or just lies. But I do believe that as the truth rears its head, you're going to see investors flocking back to gold again, maybe even more so than they did in the early stages of quantitative easing, when the price of gold moved up to 1,900 in 2011. I think that reaction, investors looking to buy gold, was the right one. I think when they gave up on gold because they believed all the hype coming from the central banks regarding how successful their policies were, I think that was the wrong reaction, and investors will go back to their initial knee-jerk reaction, which is to buy gold and sell fiat currencies.
Well, Friedland argues that unlike copper, gold doesn't really have the same kind of disruptive technology entering the marketplace. So, for example, you spoke about this earlier, copper has the electric car demand that's going on right now. They also have the China ban on scrap metal imports. So those are things that are driving copper prices to go up. But he argues that gold doesn't have that same thing to keep boosting it forward.
Well, sure it does. I mean, it has a different dynamic. But of course, you know, as there is greater demand for copper, there will be more money invested in capacity to mine copper. And that's going to happen eventually. But in the short run, I agree. There are a lot of commodities that are going to be in short supply and the prices are going to go up. But what gold has going for it is the fact that the world's monetary system is a mess. And I believe that the dollar is going to lose its role as the reserve currency, and the world is going to have to find a new monetary system, and nothing works better than gold. And I think that the world's central banks and the people around the world are going to be rediscovering why gold has been money for thousands of years, and I believe that we will return to a gold-based monetary system rather than a dollar-based monetary system. And so when people around the world and banks around the world rediscover the monetary properties of gold, then all of a sudden there's tremendous demand for gold that has been absent for decades. And ever since Nixon took the world off the gold standard in 1971, gold hasn't played the role that it has historically played, and the world has suffered the consequences. But when we re-embrace gold, that's a whole new source of demand, and I think that's a lot more revolutionary or potentially disruptive than electric cars.
When we first started this conversation, I mentioned that the dollar's been dipping for all of 2017. How much lower do you think it will go?
Well, I think it's got a long way to fall. I mean, all we've really done is reversed the Trump rally and a little bit. I mean, I think the dollar rallied about 6%, or the dollar index, from the election of Trump to the inauguration of Trump. It's now fallen by better than 10%. In fact, if you look at the dollar index, we just cracked below 93 today, so we're now trading at a 92 handle. I think the key support is just below 92, around 91.90. If we close below that, then we could return to 80 on the dollar index. That would take us back to where we were at the beginning of 2014. And then below that, maybe, once we crack through 71-ish, that's the record low, right? We got down to just below 71 in 2008, right before the financial crisis. Then we returned to that level again in 2011. So we've got a bit of a double bottom just around 71. But I think by next year we could take that out. And then it's, the bottom drops out. I mean, 60 as a minimum would be my target on the dollar index. But I ultimately think it's going a lot lower than that. I mean, imagine this. The dollar is weak right now, with everybody believing the Fed's going to keep hyping rates, with everybody believing the Fed's going to do quantitative tightening. Imagine how much weaker the dollar gets when the Fed has to admit we're in a recession, call off the rate hikes, go back to rate cuts, and launch QE4.
We're going to have to wait and see what happens when that does happen. Peter Schiff, CEO of Euro Pacific Capital. Pleasure to have you on. Thank you so much.